Let's bring in Main Street Asset Management Chief Investment Officer Aaron Gibbs. All right, Aaron. So the message to the folks at home is it's going to get wild, but hold on, buckle up, because it's going to be short-lived.
Right. So I actually looked week by week of the last week of October, the first week of November, on presidential election years for the last 9 elections. And in essence, the VIX spikes about 30% higher than its daily average for the rest of the year for those 2-week periods, and then immediately starts to tail off after the first week in November. We might get a second week when there's uncertainty. It takes a little while for votes to come in, but this is strictly short-lived, and it's a combination of obviously, earnings season, you already have slightly elevated VIX, and you'll see sort of quarterly tracks on the VIX. But presidential elections combined with earnings reports just adds that double whammy, and so you're just going to see that increased volatility for the next couple of weeks.
So obviously, a contested election, then we'll probably see a spike like that one, right? I mean,
exactly.
All hell will break loose.
Exactly.
It doesn't matter which candidate wins, then? You still think no matter what, after a winner is declared, the market will settle down, at least the VIX will settle down?
Yes, absolutely. I don't think you should really be making big bets on either winner, because obviously we know politics and enabling new policy takes a long time to change. I don't think there's any company is immediately going to have their earnings go up for the next quarter or two. And so stay steady. Stay with your long-term thesis of where growth is going to come and where the economy is going to go and where we can see.
Well, let's pick up on that, because you are talking. It's time, value. This is value versus growth. And listen, it bottomed maybe here a little earlier in the year. Got some traction. A lot of folks, I remember almost half the guests were saying, hey, value, value, value.
Yep.
Then it started to run out of steam again. What's going to get value to really start to outperform?
So really about value is essentially lower rates and seeing people really get out of bonds from those yields, look for more valuation, sort of dividend payers coming into the valuation plays, and ultimately disfavoring some of the momentum trades, which we've really seen recently. But I think still, even though I do believe in value plays, doing a broad index can lead you into a bit of a trap. I think when you're looking at value, it's better to be more selective about growth at a reasonable price and really looking for those cheap stocks rather than just more of the broad index. And
I think, so you also like the S&P 600 more than the Russell, in part because of the quality of the names on there, but I think you probably would say the same thing. By the way, this is starting to take off.
Yeah, and look, the Russell, I like the 600 just because I have more data on it, but honestly, it's something that I can delve deeper into. But they really trade. They're highly, highly correlated, so you can use ETFs interchangeably. Honestly,
I got to ask you though. We got 30 seconds, but I got to ask you about these home builders, because you like the home builders right now.
Yeah.
I think one of them had a pretty rocky earnings report recently.
Yeah, D.R. Horton was a big miss.
Right, and then of course interest rates. Yields are going up, mortgages are back up. What is it about the home builders now that you like them right now at this point?
So one is that they've really been able to outperform even as we've seen rates hover, especially those long-term rates. They haven't been going down as much as expected as we've seen the yield curve really sharpen. And they've been holding up very well, and they've been performing with the market, but having lower volatility. So I think we've seen that there's just a long-term secular trend of lack of homes in the United States. This is going to continue to control. Even if rates don't get that cut as fast as we've been expecting, these stocks still perform. And so I think these are two of the best of breeds within the home builders index of the S&P 500. They're pretty interchangeable.
Right. So to your point, even with rates there are, mortgage rates now, they're going to come down, and that's just an added boost.
Yeah, and right now they've been trading sort of sideways for the past 6 months. These stocks have been going up.
All right,
so these are good.
All right, young lady, have a great weekend.